Volta charging stock analysis. Okay guys, so in this video I'm going to introduce you guys to a brand new EV charging stock that's kind of running under the radar right now. So obviously you guys know how much I'm talking about ChargePoint. To give you guys kind of some background for you guys that are new to my channel, I bought a position in ChargePoint, a fairly large one, at around an average cost of around $25, and it was a little weird to kind of watch that position ebb and flow, but all of the EV stocks, sans Tesla, seem to be trading up now. And I want to introduce you guys to another EV charging stock that I haven't really seen anyone else talking about much. I haven't seen it on mainstream media or anything like that, and that is Volta charging, that is going to merge with the SPAT, ticker symbol SNPR, guys. Before I get into the bulk of the video, I want to remind you guys, hey, grab your free stocks on Webull, guys. It's 100% free. All you have to do is open a Webull account and deposit at least $100. If you just open the account, you'll get one free stock, and then if you obviously make a deposit of $100, you'll receive a second free stock, guys. And these two stocks are maybe valued up to $1,850, guys. It's 100% free, and Webull is by far a much better app than Robinhood, guys. Robinhood is the worst customer service, and they're basically just focusing on IPOing instead of their customer base, guys. So I would say definitely, if you're having problems with Robinhood, I read an article in Wall Street Journal, think about switching to Webull. Okay guys, so let's get into the bulk of the video. So why am I telling you guys about SNPR? So I read a lot of your comments, a lot of you guys ended up buying ChargePoint at around $40 or so, and while I think ChargePoint is still going to be $3,000, I started to think more so that I wanted to kind of show you guys these stocks when they're really unpopular, when they're super cheap. Because even though I'm super long-term bull in terms of EV charging market, where basically you're going to have an explosion of these vehicles on the road and people are going to be driving them all around and things like that, they're going to need to charge them. I think now I'm going to start making videos right when I think it's an excellent buying opportunity. So taking a look here at SNPR, we're looking at an RSI of just around 40, guys, and this stock was all the way up to $17 back in February. And as you can see here, it's trading at around $10. This is basically the minimum SPAT level, guys. So you're basically getting in on the ground floor, and no one is really talking about this stock. The volume is like super low. We take a look here at the volume. The volume is literally like not even 1 million shares a day, guys. So this is an excellent opportunity to get into the stock. So let me tell you a little bit more about why I like it so much. So, you know, I've talked a lot about ChargePoint, and Volta completely different, guys. So they're a huge disruptor. So to give you the short of it, basically, here's a picture of the charging station. Volta charging is actually offering free charging up to 30 minutes, and they're going to show advertisements on the actual charging station. So this is revolutionary, right? So their business model is basically to have EV charging stations near malls and shopping centers, restaurants, high traffic places, and that they're going to offer free charging, and in return for that, they're going to sell advertisements on the charging station, as you can see here. So why is this business model so advantageous? Well, it's completely new. And, you know, there aren't any other charging stations doing this. So most other charging stations are obviously just charging you for the time. Volta is a little bit different. So they agreed to with the SPAT. Here you go. Here's on their investor relations site. They agreed to merge with the SPAT Tortoise Acquisition Corp. Second, which is ticker symbol SNPR. And the stock is currently trading at just $10, guys. So, you know, I think this is a really interesting opportunity. So let's talk a little bit more about the complete merger, and I'm going to go into the actual investor presentation. So here we are. Basically, what's going to happen is that it's going to, like most SPATs, it's going to have a business combination, and the SPAT is going to trade on the New York Stock Exchange under the ticker symbol VLTA, and the transaction value is going to be $1.4 billion, of which Volta will receive around $600 million to build out their charging stations and pipeline. And this deal is backed by BlackRock, Fidelity, and Neuberger Berman funds. So why do I like this kind of idea so much? Well, you know, it's really unique. So let's talk a little bit more about the actual business model before I get into the investor presentation. So as you can see here, it says Volta's unique business model is poised to capture the vast consumer spending shifts that will accompany our society's shift from carbon to electric. With the shift to electric mobility, consumers will expect to fuel where they go. Volta will anchor the infrastructure trains, transforming fueling locations away from standalone gas station high traffic locations in the community where consumers live, work, and play. So we're going to talk a lot about this business model because this business model is completely new, and I really haven't seen anything like it. So let's just jump right into that investor presentation. So if you guys want to see all of this information yourself, you can obviously just click the links in the description below. If you guys are watching this on the TV or something like that, just access this video to grab the links like on your smartphone or your desktop, however you're watching this content. So let's talk a little bit more about basically what's going on. I hope you guys can see this. I'll just blow it up a little bit because it looks a little small here. So basically Volta was founded in 2010, and this deal is going to, I think it's going to really disrupt the EV charging industry. So a couple of reasons in the presentation. It says the market opportunity that capitalized on transformational industry megatrends, differentiated and unique EV charging business model, compelling revenue diversity and unit economics, top charging utilization amongst competitors. So let's talk a little bit more about this. So as you can see here, it's talking about how electric cars are going to be cheaper in the next couple of years. And we're already seeing that with Tesla. They're constantly reducing the costs of the cars, which will help propel margins much higher. And as you can see here, basically you can see demand for charging, the number of vehicles sold, and basically the infrastructure that's going to be needed to support all of these new cars. So all of this is excellent data, guys. And you know, we already know this. You guys been following my channel for a while. You already know a lot about how the charging is going. You guys seen Tesla or anything like that. So there's a lot of bullish signals here. Obviously, Joe Biden is going to be supporting this with legislation and, you know, stimulus to help push this forward. And you've got all these EV companies like Tesla, NIO, Rivian, Lucid. So there's just an explosion. Of course, the OEM producers, they're coming in with vehicles, Ford, BMW, things like that. So why is this company a little bit different? Well, I think this is a bit of a stretch because in this presentation, they're basically comparing themselves to Airbnb, Priceline, Amazon, and Netflix. But basically, they say they're disrupting the EV charging market. So why is this disruption, you know, such a huge opportunity for Volta? Well, let's talk a little bit about their business model. So as you can see here, it says commerce-driven charging. So their business model is they're going to be selling advertising, right, and offering free charging. So this advertising is basically going to allow advertisers to push their products in certain neighborhoods. So for example, let's say there's a Volta station at a nearby mall. Maybe there's a local restaurant that wants more customers. They can end up buying an advert on the Volta charging station, and then people will like see, oh, like there's you know 20% off or something like that for this restaurant, and then they'll be able to get more foot traffic. And they've already had good results with this business model, and we're going to talk a little bit about that. So they offer the free charging for 30 minutes, and then after that they charge you, but it's just a way to kind of get people to use the product and to generate revenue. So I think this is kind of like the Google of charging stations. We see Google is generating a ton of money by basically, you know, offering everything for free like YouTube and Google search, and then they just sell advertisements with AdSense. So they've been making an absolute fortune. Google's doing that, and maybe Volta charging can do something similar. So here's the company timeline. So as you can see here, the company is basically moving forward and has a lot of things you know, planned in the pipeline. So, you know, at first they had AC charging, and then they're working on DC fast charging, and then they're going to offer plug-in charge and things like that. So one of the weaknesses of this company is that they don't have any home chargers, so they can only generate revenue from the stations that are like positioned in the shopping centers and stuff like that. So that is one difference, and why I still like ChargePoint, but I think this business is really interesting, and the fact that the stock is super cheap, I think it's really interesting. And then another thing I like about this company is that they plan to generate a ton more revenue per station. So because they're going to be showing a lot of advertising and stuff like that, they're guessing that as the longer the stations stay there, the more and more they can charge for revenue, and it'll keep increasing the cash flow per station. And these are just some more numbers and things like that. So they're just talking about how as EV demand increases, they'll be able to generate more and more revenue. So, you know, right now they don't have a ton of stations, okay? So basically they're working on scaling everything out. But you know, the good thing is that they have a huge pipeline, as you can see here. So the pipeline is absolutely massive. They have a pipeline for around 10,000 stations, 20,000 screens to show advertising, and 5,000 sites. So right now they're currently much smaller than that, and they're planning to expand all over the United States. So when they're able to basically scale out, they'll be able to generate a lot more revenue. And like you say, they're working with a lot of different partners and things like that. So they have some good partnerships with Netflix, Facebook, Amazon, and things like that. So, you know, as you can see here, basically, they're comparing themselves to ChargePoint. They're saying the business model is a bit stronger and things like that. Now, I kind of disagree with this business model a little bit. I mean, I disagree with kind of this part of the presentation, because I really believe that ChargePoint has most of the Fortune 50 and most of the Fortune 500 companies using it. They have the best-selling home charger on Amazon, so that gives them a really strong selling point. But if Volta is able to basically scale that advertising business, kind of like Google has scaled theirs over the years, then they could be onto something. So, you know, we'll see exactly what happens with this. So, as you can see here, it talks a little bit more about how EV charging demand is changing retail, and this is exactly what I was talking about, how they're basically going to be generating a ton of revenue with their charging stations. So they have the charging stations near malls and shopping centers and stuff like that. So as you can see here, this is kind of their business model layout. So as you can see here, we'll take a look here. Here's an example of their charging station with an advertisement on it. So, you know, it's just really interesting. I've never really seen a charging station try to basically generate money selling ads. And, you know, this is all new to me. It's very interesting. You know, obviously, you know, they have their own app and everything like that, just like ChargePoint. And, you know, this could be a big winner. So, as you can see here, this is an example of how basically their charging works. Like, here's a real example. So it says here, when a nearby Safeway got a free L2 Volta charging station, I immediately switched grocers and haven't looked back. So a lot of consumers are basically attracted to the free charging for 30 minutes. And then that's kind of bringing in more business to these local shopping centers and stuff like that, because they don't have to pay for the charging. And according to the presentation, it says 7 times more EV drivers attracted, and they stay even longer. So, you know, this is just really cool, and a brand new design. As you can see here is a case study. They said Volta helped us create awareness and trial their Volta activated Whole Foods location. So, you know, apparently this company advertised on a Volta charging station near Whole Foods, and they increased their sales by 35%. And yeah, so that's basically the bulk of the presentation. So let's get down to the financials of what's going on here. So as you can see here, the company is projected to hit around $800 million in revenue by 2025. That's cumulative, all the revenue generated together. And, you know, using a conservative price to sales ratio, a lot of these other charging station stocks trade at, for instance, ChargePoint's trading at quite a high price to sales ratio of like 40 to 50, somewhere around there. So obviously I expect these ratios to come down. But even if Volta is, you know, going to be at like a 10 to 20 price to sales ratio, which is probably more reasonable, this is still like an $8 to $16 billion company. So, you know, there's a massive opportunity now, and then, you know, the SPAC deal is under $2 billion. So there's basically, you know, 5 to 10x potential upside in the next couple of years using this kind of Google sell advertising type of revenue model. And, you know, like I said, the revenue mix, obviously they're going to be earning, you know, they only give you 30 minutes for free, but this whole advertisement is going to make up 37% of the revenue mix. So I just think it's really interesting, and they expect the behavioral revenue to continually to increase over time, as well as the charging network. Now they are expecting, which seems a bit ambitious, but they're expecting 100% compounded annual growth rates over the next 5 years, which would mean we're really going to see these stocks sold. And they're planning 26,000 stations to be installed by 2025. So they're really going to grow, and, you know, looking to grow profits and EBITDA and everything like that. So, you know, this is a wonderful growth story, I think, and I think there's a lot of upside in this stock as well. If they can really execute on these numbers, we could have 5 to 10x upside. So now let's quickly go over the transaction details. So if you're going to be buying shares in this, you're going to basically be buying the Tortoise 2 SPAT. So those shares, that's around 17% of the shares outstanding. So after the deal is closed, like I said, the ticker symbol will change to VLTA, and it'll be around 200 or so million shares outstanding. And that would kind of give the company, after the deal closes, that would probably give it like a $2 billion valuation or something like that. So yeah, like I said, guys, pretty straightforward. If you guys are interested more in how SPATs work, be sure to check out my website. Click one of the links in my description, or just over at investortrick.com. I explain everything about SPATs work, but I just wanted to keep this video a bit shorter. But I just wanted to show you guys exactly what's going to happen after the transaction is closed. And finally, this is really, really interesting, because apparently this company is looking to really disrupt all of these other charging stations. And according to the presentation, they're basically just beating the pants off of ChargePoint, EVBox, Blink, and all EVgo. These are all the other competitors that we've talked about on this channel. And Volta, is basically positioning themselves to be one of the top winners, if not the biggest winner, based on their revenue mix. Okay, guys, so let's wrap up things with this video. I hope you guys enjoyed this presentation. Basically, do I think Volta Charging is a buy? The advertising business is a very strong business. We've seen what Facebook has done. We've seen what Google has done. There's opportunity in advertising. Advertising is not finished, not by any means, even though companies like Netflix have basically, a lot of people are attracted to Netflix because they don't like seeing ads. There is big business in the ads, and I like the fact that this stock is a little bit different. I like the management. The founder and CEO is a very young guy, so it's a long time frame to grow this business. And I really think that this stock is undervalued, because it's, Blink and ChargePoint, all these other stocks are moving up, but this one's flat. So, I just wanted to let you guys know a little bit more about this company. I think it's really interesting. So if you enjoyed my video, guys, please smash the like button and smash the red subscribe button as well to receive more video updates from me. And if you guys enjoy my content, be sure to stay tuned and check out some of my other previous videos where I talked about Blink, ChargePoint, EVgo, and some of these other stocks. And you can find those links on my channel by just heading over to my channel homepage and hitting that search button. So that's it until next time, guys. Hope you enjoyed the content. Take care.